What is going on, guys? It's Ricky with TechBud Solutions. Hope that you guys are all having an amazing Sunday. Happy Father's Day. I am going live a little bit later today, about almost 2.5 hours almost live later, just because I spent a little bit more time with my daughter before she went to bed. Obviously, today's Father's Day, so for those that do not know, I am a dad. Actually, we're expecting a second one. My baby boy is due early October if everything goes well. So again, hopefully you guys had an amazing day. Congratulations to all the fathers out there. Hopefully you guys enjoyed your day. And I just wanted to make sure that I did my part in quickly going live and covering anything it is that I think you should know before the week starts. So NASDAQ futures already opened. They are slightly in the green. Believe it or not, this is how irrational the markets are. Markets are still slightly in the green, only 0.15%, but green is green, and we need to acknowledge that. There's some stocks even more rational than this. Tesla's up 1.77% during the overnight hours. And there's war breaking out, right? Tensions are still incredibly high with Iran and Israel. They seem to still be attacking one another. Just wanted to provide you guys with some quick updates, and if things are bullish or bearish, what I'm going to be paying attention to. If you guys have any stock you guys would like me to break down, literally just share it in the live chat and I'd be more than happy to break it down for you. You do have to be subscribed to the channel to partake in that live chat. So again, all I literally ask you to do is subscribe to the channel, drop a thumbs up, and share your top stock in the live chat. Just make sure that you share the ticker symbol. So this was posted on X. Again, feel free to do your own due diligence, but it says breaking at least 25 air tankers en route to Europe and Middle East from the US right now. Prepare for draft day. So obviously it doesn't mean that people are actually going to be drafted as of right now, but there's no question that assistance and aid is happening right now. So just something to take into consideration, where some people are saying that, things 100% are going to be resolved. Not necessarily the case, right? Like Alex Jones took to Twitter, or X, says breaking: Trump and Putin agree that conflict should end in an hour-long phone call on Israel and Iran. The U.S. rejects whatever that name is, request to join the war against Iran. The American people demand peace, which I think that is great. Obviously, we want peace. We don't want to have to inject ourselves into any war if we do not need to. But there is no question that the U.S. just has a huge track record in supporting Israel. So we'll see if Iran and Israel actually give in and begin to no longer attack one another. But I wouldn't be surprised if this conflict continues. With that being said, again, what a big focus that I have for this week. The thing that I think everyone should be aware of is, if you guys look at the economic calendar, if you don't have access to an economic calendar, techbudsolutions.com. If you touch trading tools, if you go under that tab, we provide it for you for free. So it updates. Again, you can just select today, you can select this week. And if you select on this week, the big focus, in my opinion, I just want to make sure that you guys are all aware of it, is that this Wednesday, if I'm not mistaken, at 2 p.m. Eastern time, we're going to have an FOMC rate decision. So there is a very high probability that the Federal Reserve is going to pause once again. Almost a 99.1% probability that the Federal Reserve is not going to cut rates. And it didn't even go to cutting rates anymore. It went to actually increasing rates. There's a 0.9% increase because of the most recent inflation report and economic data that was recently released. So if you were expecting or hoping that the Federal Reserve was going to be cutting interest rates, it looks like the odds are definitely against you. No question about that. So the big focus this week, Wednesday, 2 p.m., just please make sure that you are aware of what is going to present itself. There is a Fed rate decision, and once it gets reported, it's most likely going to be a slow day leading up to the report, and then once the report gets released, then the market reacts. I'm not here to pretend like we can predict the future. I don't think that maybe this week the Fed rate decision is going to be super important. This is 100% just my opinion. The reason I'm sharing that with you guys is because, well, there's a war going on, and I think that's going to be the headline for this entire week. I think that we all know that the Federal Reserve has no expectation in cutting interest rates. So it's kind of just going to be almost like thrown under the rug, where it's a given. There is no expectation to cut rates. My job is just to make you aware that economic report is going to get released. Then I wouldn't mind even going live with you guys, but I would not be surprised if it was just a very flat day, because what the market is mainly focused on, in my opinion, are two things: the tensions between Iran and Israel, if things get worse or if they get better. That will determine if markets go up or if markets go down. If things get worse, naturally, there's more uncertainty that gets injected into the markets. And as markets are incredibly overbought, there's a lot of pullback potential. So in my opinion, it wouldn't take much for there to be uncertainty injected into the markets. But markets are incredibly irrational right now. They want to go higher, right? And as long as things are not getting worse between Iran and Israel, then markets have the environment or the condition to hold and or progress from these levels. So just something to take into consideration, paying attention to the war between Iran and Israel. The second thing is, what the heck's going on with China, right? Is China actually going to sign a trade deal with the US? That is one of the main reasons that we began to see the market recover from the initial sell-off that we saw early 2025, right? Early to mid 2025. The reason why was that it was expected that, okay, these tariffs, this trade war was no longer going to get worse. But now, 2-3 months later, we still have no trade deal signed, right? So just something to pay attention to. If progress is presented this week, markets can be conditioned to go higher. If for some reason, right, I brought it up earlier in today's video. I don't know if you guys saw this, but supposedly Chinese cargo aircrafts land in Iran after turning off transponders during flights. So imagine that. We're negotiating with China right now to try to sign a trade deal. Now imagine if China is helping out Iran while we are helping out Israel. Do you think that that could be a conflict when it comes down to trade deal negotiations? I'm not a rocket scientist, but I think common sense is important. And I wouldn't be surprised if it already worsens the tension between China and the US. Again, I'm not saying that you need to sell everything. I'm just saying be cautious and be careful. Pay attention to what it is that's being said versus what it is that is or has been expected. Remember, the markets have been going up based off of the expectation that a trade deal is going to get signed, that things won't get worse. So if a trade deal is not signed and if things do get worse, then naturally markets should drop. So let's say what happens if markets begin to drop? Well, if markets begin to drop, you can either short the market, but for those that don't like to short, then there's an inverse ETF that is not an investment vehicle, but that goes up when the markets go down. And that's SQQQ. So when markets go down, SQQQ goes up. It's a triple leverage ETF. I would not recommend it for beginners, but it's useful to understand that when markets downturn, this thing upticks. So again, very simple. If markets do begin to downturn and you don't like shorting, this could be something to pay attention to. But if markets continue to uptick, then again, what could we pay attention to, especially with what's going on overseas? A big focus for a lot of people. It's not my focus, and I'm not here to pretend like I trade crude oil all the time. I rarely ever do, but it's something to pay attention to. Iran and the Middle East is a huge exporter of oil. And based off of the current tensions, there's no question that there's a lot of uncertainty about our prices for oil and energy are bound to go up, right? That was something that I shared with you guys a few days ago, where there's a huge probability that gas prices are bound to go up, which will most likely contribute to our inflation rate going up as well as crude oil prices per barrel begin to increase. It's a domino effect, right? So if things begin to increase on the producing side of things, they're going to get passed down to the consumer. It's not rocket science. It's understanding how things follow, right? So as long as crude oil continues to rise, we can expect that energy prices will also rise, meaning inflation is bound to rise once those months get factored in. But if things do begin to ease in the Middle East between Iran and Israel, then maybe we can begin to see crude oil prices and energy prices begin to drop. So this could be an opportunity. This week, I will be paying attention to crude oil prices, because if tensions do begin to flatten out, and things do begin to get better between those two countries, what do you think is going to happen to crude oil? We can retrace, right? That could be a potential short opportunity. And not even short, but there's also an inverse ETF for UCO that goes up when crude oil goes down. So something to pay attention to, right? PLTR, right? A lot of people are paying attention to PLTR right now. This is just my 2 cents. Is PLTR a good investment at $140 per share? If you're asking for my opinion, the simple answer is no. PLTR is not a good deal at $140 per share. It doesn't take a rocket scientist to quickly look into the PE ratio of what PLTR is trading at versus what it's valued at. It is trading at 568 times its earnings, meaning from what the company is trading at to what the company actually produces, you're paying a premium to buy it and own it right now. If you want to do that as an investment, be my guest. Does that mean that PLTR can't be a good trade? That's definitely not the case, right? A trade is very different than an investment. It's different intentions. So if you believe that markets will go higher, if you believe that PLTR can benefit from what it is that's going on and PLTR will continue to push up, then again, be my guest, right? I don't think it's worth the risk at these levels, but we all have different risk tolerance. I'm not here to pretend that the way that I do things are the only way to make money. I've been wrong many times, but also just because I don't choose to trade or invest in something doesn't mean that you shouldn't. It's just, I like to make people aware, especially beginners, of the risk that they are choosing to take on. As long as you acknowledge that, regardless if you win or lose, it's a position you decided to put yourself in, right? But as long as you do it intentionally, you understand both sides, not just the profit potential, but also the risk potential. At least you're putting yourself in positions in which shouldn't come as a surprise if you end up taking a loss, right? And I think that's the best thing that we can do for our beginners is not tell them what to do. We're not here to do that, but to inform them of, okay, this is potentially how much you can make if things continue to get better for PLTR, because there's no question PLTR is incredibly bullish. There's a lot of momentum. There's a lot of hype. Yes, it's incredibly overvalued as an investment, but as a trade, if momentum continues, who says this thing can't go to 150 per share in the short term? We know big picture, most likely, if things do begin to downturn, this is the one thing that I always want to highlight. If things do begin to downturn due to uncertainty, due to trade war concerns, due to tensions between China, Iran, and Israel, whatever the case might be, right? Markets are overbought. We can all acknowledge that, right? If things do begin to drop, PLTR will be one of the biggest losers. Any overvalued stock during a downturn will see some of the biggest retracements. Why? Well, it never belonged up there. So then when reality sinks in, then yes, just as much as it overreacted on the way up, it tends to overreact on the way down. Because again, we all know that people become incredibly over leveraged at overbought levels, right? Very simple. So again, I love sharing both sides. I love talking about both sides. I always love to entertain the idea of being able to make more money, but also understanding the risk that it comes in, right? So I hope that you can see that based off of the way that I'm explaining this. So let me go ahead and I'll break down. We talked about crude oil. We talked about SQQQ. We talked about PLTR. I didn't want to take much of your guys' time today, so we're already at 13 minutes. Let's do 2 more stocks. Does that sound like a plan? Drop a thumbs up, be subscribed to the channel, and share your top stock in that live chat, and I'd be more than happy to break it down for you guys. Make it a good one. Make it a good one. Why this week? Why this week should we pay attention to that stock? So if there's a stock that you're like, Ricky, you need to pay attention to this stock this week, tomorrow, you need to pay attention to it. So what is something that you would want to add to my watch list right now? That if you're part of my LPP team and you're watching me trade live tomorrow at Market Open, do you want to see it in my watch list and possibly see me trade it? What is it? SoFi? Why do I want SoFi? Do I want to go long or do I want to go short? Why SoFi? What about SoFi? Explain it to me. So Mbappe, Funk, explain it to me. Why would I want SoFi? Doesn't look like a good deal. I could see the uptrend, but why this week? I was thinking of a short if it breaks 1350. Okay. So you're looking at on the larger time frame. You're seeing it as a retracement. If it breaks support, a potential leg down. I see that. The only thing that I want you to take into consideration is on the 4-hour time frame, right? Like you know, So I think that's why you said 1350. We need to break this ascending support. It's still bullish. It is overbought. There is some retracement potential, but it's still an ascending uptrend pattern, and it's our job to respect that. If you choose to enter early and you don't respect the trend, it's not that you have to be wrong. It's that you're just simply making it more challenging for yourself, right? And we've all experienced that ourselves. It's either swimming with the current or against it. So if you want to wait to go swim with the current, then yes, waiting for confirmation would definitely make sense. So I'm glad that you brought that up. I can see the potential. Just this week, I don't see why SoFi would be at the top of my list. But Oracle. All right, Ben, why do I want to pay attention to Oracle? Oh, okay. Let me ask you this. I like this one. I like that you brought this one up. Do I want to go long on Oracle or do I want to go short? You guys got to admit, right? I'm glad that you brought this up because it's relevant. There's something that's happening here. I'm going to have to look into it fundamentally, not just on the technical side. What do you think? Short? Yeah. Oracle's pushing. Oh, some are saying long. Long? Okay, I'll pull up Roblox in just a second. Long on Oracle. Okay, so again, if your intention or your plan is to go long on Oracle, be my guest. I'm not here to convince you not to do it. You're an adult. You can do whatever it is that you want. It does not affect me, right? I would explain to you on why I wouldn't. I can see that there is an irrational amount of volume right now that there normally isn't. I can see that price action is more rational now than it normally is. So for me, there's a catalyst here, and normally catalysts are short-lived. So it's great that it pushed up. Being pushed up doesn't mean that it has to go down, but it also doesn't mean that I have to jump in and pay a premium for a stock that can be a short-lived pump and then dump, right? For me, when I see pumps like this, it's not that I have to short it, but it's definitely a stock that I would consider watching because just in case markets do begin to drop, this thing just gapped up, what is that? Over 20%? Yeah, 21% in 3 to 4 trading days. So knowing how overbought it's become in a short period of time, if markets do begin to drop, everything should be dropping then, right? But then because this thing gapped up so much, it will most likely, just like anything that's incredibly overbought, will retrace much harder. So again, I can see why this would be in my watch list for a stock to pay attention to if conditions are met, right? If we see a retracement, if we see, it ultimately end up changing direction and we get confirmation of that. But again, that means that we have to take steps and actually wait for that opportunity to present itself. Definitely too volatile. And I also respect that as well. There's a lot of people that would be like, heck no, this thing went from 170 all the way up to 200. I don't want to go long. I don't want to go short. It's too volatile for how I like to trade. And I respect that, right? For you to be able to identify them and be like, I don't do well with stocks like this. That's great. Lulu. All right. I don't know if this is going to be a good one for me. Lulu has not been performing well historically. So I could see why maybe as a long-term play, right? I'm guessing that that's what you're presenting. But after it recently reported earnings, it saw a significant drop. The cheap can always get cheaper. And it looks like this is a good example of it, right? It's tried to recover. It has shown signs of recovery before. It's now coming back down to retest $230 per share. So again, if you want to go for a Hail Mary and you just hope to get lucky, buy a few shares, maybe add more to it when direction becomes favorable, then so be it. But again, that's obviously a gamble. As of right now, there's no confirmation of reversal, no indication of a reversal. So I would see there to be no reason on why to buy the dip. Doesn't mean that I need to short it here as it's incredibly oversold, but I could see why it's attractive to watch and add to your watch list. If your girlfriend, or I guess maybe even your boyfriend, right? If they like Lululemon and they're always looking for deals, then hey, maybe show them this stock, see if it's something that aligns with their criteria, and maybe they can own a few shares of Lulu. Because if Lulu does end up making a recovery, there's potential there. No question about that. But I would also look into the stock, not just technically, but fundamentally. There has to be something changing with Lulu because this performance is embarrassing, right? From $516 per share all the way down to $230, losing 50% of its value in 1 year of trading. I mean, that's a substantial loss. Definitely something worth looking into and not just buying blindly just because you can. I know I said that I was going to, I think it was Roblox, right? What is that? Okay. RBLX, is that it? Okay, I'm not, is this a gaming? Okay. So I like that you brought it up. It seems like you're pretty informed on what Roblox is. I have no, maybe it's my age. I don't play video games. I don't know anything about this, but this is where maybe your knowledge and your expertise can pay off when it comes down to trading and investing. Invest in companies or maybe trade companies that you use every single day, right? It looks like there's something going on with Roblox from $47 per share all the way up to $100. That is a 100% return in, what is that? In how many days? 68 days, a 90% return. Yeah, it's insane. Now, again, this is just my opinion. I'm not here to convince you to not invest in it. Seeing how much it's gained in such a short period of time, from what I quickly saw that you were stating about Roblox, you're saying that, oh, they just came out with this new game, they're absolutely killing it. I think that's amazing. But what I've seen before is that these rallies are short-lived. Hype ends up fading, and this has become incredibly overvalued in a very short period of time. It's not that Roblox can't be valued at this, but even if I just look it up maybe fundamentally, I want to see if it's trading at a premium and if there's hype being factored in. So this is where okay. And again, please, you invest in whatever it is that you want. I know that there's a lot of different ways on how to make money in this market. This is the parts that are kind of like red flags for me. Look at Roblox performance, and I'm sure that there's a great reason for it. And I'll look into it, but obviously I'm going to need more time than just what I have in this live session. Roblox went from $50 per share, $47 to $99, right? A nearly 100% return. I think that's great. That's a great trade opportunity for those that jumped in. When I look at the larger time frame, it's incredibly overbought. So now I want to ask myself, well, hey, maybe this thing can still go up, right? There's obviously huge downside risk, but maybe it's still a company that's very undervalued, right? Maybe, because you were saying that this is something that I want to invest in, right? Maybe. When I look at Roblox, it's trading at a negative 74.9 PE ratio. This company loses $885 million a year, nearly $1 billion in loss. This company generates in revenue $3.8 billion, but loses a net of nearly $900 million. In my opinion, I don't care about its recent performance. Knowing and seeing this, I can see that it's all hype. I can see that it's most likely going to be short-lived. If I traded this, I would lock in profits and just take it, right? Like make that money and bounce. Because fundamentally, at least from what I'm looking at, and I'll do more of a deeper dive because I think it might be worth it, Roblox is trading at an incredible premium, meaning that from what you are paying at $99 per share to what the company actually produces in revenue, you're paying a premium to own it at that level. And how much of a premium? Huge. Negative 74 times its earnings, meaning that the company loses almost 100 times more than what it actually is trading at. But yeah, and again, just because something is overbought doesn't mean that we need to short it. I'm sure that I hope that there's some reason on why this thing is actually pushing up, because fundamentally, I don't see there to be one. So maybe they did just announce a new game. Maybe their business model is completely changing, right? That's kind of what you made it seem. I'll look into it. I can see why this is something that I would want to watch. It just, in my opinion, it would not be something that I would want to trade. And it meets none of my criteria for a company that I would want to invest in. But again, just because I don't invest in it doesn't mean that you don't need to either, right? You do you. If you think it's a good deal at $99 because it's going to 200, who am I to stop you, right? I'm not here to tell you otherwise. So UNH recovering. Yeah, people don't like when I talk about UNH. UNH is in still very early stages. It's still, I wouldn't say it's recovering. It's still trading sideways, right? So for those that bought at 250, 260, 280, we're sitting pretty right now, but there is no progress on the recovery side. So I am still invested in UNH, but a very small dollar amount, and I don't plan to add more until actual progress of a recovery is made. So maybe when it begins to trade above 330 and actually show signs of higher highs and higher lows. It's still trading below the 325 mark. Since the initial drop and the first recovery, it has not been able to break above that. So there's no reason to rush into it. I'm not in a rush to invest into UNH, and it doesn't look like UNH is in a rush to try to recover. So why overcomplicate it, right? So GameStop, Ricky, long in it at $21 per share. It has never failed in the past year. It dropped 25% and it raised $8 billion in cash. GameStop is one of the most terrible companies out there. It's a total bullshit company that is closing down stores, and it's been able to profit off of its gimmick of being a meme stock while leaving investors holding the bag. GameStop itself liquidated its own shares to put cash on their balance sheet, and now they are changing their business model to do share offerings to hopefully buy Bitcoin, doing the whole MicroStrategy Ponzi loop scheme. If that's a company that you want to invest in, be my guest. But no, you cannot lie and say that GameStop is a good investment or a good company, right? Are there times that if you buy it at $21 that it could pump up for a week or two because Roaring Kitty sent out a meme or a tweet on Twitter? Sure, anything can pump up, right? And you can make money trading anything. But is GameStop a good investment at $21? No. GameStop is a terrible company. Ryan Cohen doesn't know how to run or grow the company by any means, and he's trying to grab onto any gimmick that will bring more relevance to the company so more Reddit traders pump up that stock. If you have not learned from its previous pump and dumps, then I don't know how things can be more clear, right? Ricky, you made so much money from GameStop though. Yeah, trading it, right? It's not an investment, and I made a lot of money shorting GameStop as well. But it comes at a huge risk. And a lot of beginners watch my videos. And even while I was shorting and trading GameStop, I discouraged beginners to follow or even trade it because I know the risk it comes with. I don't think those stocks are meant for beginners to trade. They're incredibly volatile. And if you're experienced, then you know exactly what I'm talking about. You need to learn how to walk before you run. And I think for those that are experienced when it comes to trading, it's in our best interest to look out for those beginners. It's not that they can't trade it, but that we should warn them against it, right? The risks that come with it. So if they still choose to, they can't be surprised if they end up taking a loss on how quick it came, right? So I appreciate your guys' time. I hope that you guys enjoyed this little live session. Remember, this Wednesday, 2 p.m. Eastern time, we have the Fed rate decision, and the two focuses that I really have this week is tensions between Iran and Israel. Are they getting better or getting worse, and how the market's reacting, and tensions between the U.S. and China and the trade deal that we've all been looking for progress or updates on. So other than that, I'll make sure that I do my part in keeping you guys up to date. And again, I hope to see you for tomorrow's live trading session. Thank you for everyone who tuned on in. If you want to watch me trade live, a quick little heads up. The second link in the description of this live stream will get you the biggest discount that I offer. It's a one-time payment, lifetime access. And again, right now with the second link, you can join for as little as $1 a day is what it breaks down to. Remember, one-time payment, lifetime access. And yes, the lesson library that's included with the live session is designed for complete beginners. I appreciate your time. Like always, let's make sure that we end the year on a green note.